Hello, welcome to Law Excellence. Welcome to Laex Prelims Marathon series. In today's session, we are going to discuss important economy related terminology in news. As you might know, in this Prelims Marathon series, we have recorded 18 topics already. This is our 19th video. And we have two more videos. One will be uploaded by this evening. Indices, important indices and reports in news will be uploaded by this evening. And one more video that is on important acts and bills, that's news. So that's going to be uploaded tomorrow morning. With that, we are going to end this series, Prelims Marathon series. All the PDFs of this series are uploaded in the description link. Please go through that once. After watching the video, kindly go through the PDF and revise it once because consolidation is very important. There are overall 55 important economy related terminology that we are going to discuss in today's video. We are going to go very quickly. I assume that all of you are aware of the basics, that's why we are going a little quickly. Now let's start. The first important set of terms that's in news is recession, slowdown and depression. So India has experienced a slowdown in the last few months. There is negative growth rate in Q1 of this year. That's why these terms are in use. Let's understand the difference between recession, slowdown and depression. That can be a question. Differences between recession, slowdown and depression. Let's understand. The slowdown means the economic growth rate or the GDP growth rate is positive, but compared to last year's, the growth rate has decreased. That's called slowdown. Recession means the growth rate goes to the negative zone and for the two consecutive quarters, that is for the 6 months, if the growth rate is negative, then that is called as recession situation. Depression is a kind of deep recession, economic recession, which is a prolonged one, which impacts the incomes of the people and the employment. Such condition is known as depression. Here also negative GDP growth rate is the trend. Differences between them can be a question. Please understand this carefully. The next important term is stagflation. Stagflation means simultaneous increase in rise in inflation as well as the economic output. So when the economy stalls, inflation tends to dip. In general, when the economic growth rate goes down, inflation comes down. But in this case, inflation increases, economic growth rate decreases. Such peculiar situation we experience. In such case, there is this emergence of misery index. This misery index is calculated as a sum of inflation rate and unemployment rate, and it is used as a tool to understand the impact of stagflation on the population. Very, very important, stagflation. Many countries are experiencing the situation. See, during stagnation, GDP growth rate comes down, unemployment increases, demand for the goods and services decreases, inflation increases. These are the four variables that we need to consider. The next important term is ways, means and advances. Recently, RBI has increased the limit of ways, means and advances for the states and the center to borrow the money for short term. By the way, what is this word? Ways, means and advances. Ways, means, advances are short term loan facilities which allow center and states, important. Generally we think it's only center, but no. Center and states to borrow funds from the RBI. Special WMA, that is special ways, means and advances, is provided against the collateral of the government securities held by the state. See, in normal WMA, the government need not submit any collateral. But if they want to draw more money using this special drawing facility, then they have to submit this collateral. What is the purpose of this ways, means, advances? It is to bridge the temporary mismatch between the expenditure and the receipts of the government. What is the interrelation? Ways, means, advances, these loans, they have the tenure of 3 months and the interest rate charged is equivalent to repo rate. But if the government wants to borrow more money as an overdraft facility, then the interest rate would be repo plus 2% on this particular overdraft. Let's say repo is 4%. So 4% on the normal 3-month tenure loan, WMA, but if there is any overdraft facility for 21 days or more, then repo plus 2%. Next important term is tax to GDP ratio. What is the meaning of it? tax, overall tax collected in indirect and direct tax by the GDP. So that's called tax to GDP ratio. It measures India's tax revenue relative to the size of the economy. This is useful because we can understand the potential taxation in an economy, and we can direct our national tax policy based on this particular ratio. In general, developed countries, they have more tax to GDP ratio as compared to developing nations. In our country, last year's tax to GDP ratio is 10.6 percentage of GDP, 10.9 percentage of GDP, which is comparatively lower for the OECD countries. Organization of Economic Cooperation and Development, for OECD countries, average tax to GDP ratio is 31%. But in India, for the central government, it is 10.9%. If we add center and states, it's around 16.5 or something. So this is half of the overall tax to GDP ratio of OECD. That means tax collections in India are less. Understand this? Tax receipts in terms of percentage of GDP, 10.8% in the budgetary estimates. So this is not going to be increased, especially now during this corona crisis. We cannot expect to reach this target also because the GST collections are less, direct tax collections are less. So even this 10.8 percentage would be difficult in the present circumstances. In that context, keeping in mind the tax to GDP ratio in India, recent budget has proposed a few changes in the tax proposals. First one is concessional corporate taxation at 15% for the newly establishing manufacturing and companies in the power sector. Tax concessions are given for sovereign wealth funds. Tax concessions are given for startups. Tax concessions are given for cooperatives. See, when the tax to GDP ratio itself is less, why are there concessions like this? Why? Because government wants to encourage the economic activity. With increased economic activity, taxes increase. It's government's objective is not to levy higher percentage of tax on one single individual or one single company, but to enhance the tax buoyancy and tax base. So government wants to enhance the tax base, government wants to enhance the tax generation in the country through increased economic activity. That's why concessional tax rates are proposed in the recent budget. These can be asked as part of prelims. Please go through them. There is this issuance of unique registration number for all charity institutions, extension of time limits for the tax benefits for affordable housing under Pradhan Mantri Awas Yojana, etc. Health cess, very important. We have 7 functional cess that's imposed from the central government, and this is the new one, 8th one. Health cess is imposed on the imports of medical equipment from various countries. There are other tax proposals. What are they? Dividend distribution tax, DDT. Dividend distribution tax is removed. What was happening earlier? So this is a company, and the shareholders who has brought the shares from this company, so they are given percentage of profit, which is called as a dividend from this company. So on this dividend, company itself used to pay the tax. That's called as dividend distribution tax. Dividend distribution tax is a direct tax. Now this is removed, and who should pay the tax? These people. For them, additional income, yes or no, the profit that is distributed is additional income. So they are going to pay the tax as part of their income tax. So that's how DDT, which is a double burden to the company. Already company is paying corporate income tax. Apart from that, if they have to pay DDT, which is going to be double burden on the company, that's why DDT was removed. New income tax regime in the form of national e-assessment system, very, very important. National e-assessment system was brought in to streamline the taxation, especially the income tax in India, and tax base and tax rates are changed. Simplification of GST returns and e-way bills. What is the meaning of e-way bill? Let us understand this at the later part of this video. E-way bill is an important topic that we need to understand. And there's one more development in the budget. to this year's budget, that's related to corporate income tax. Corporate income tax has been reduced to 22%, which is comparable to all other emerging and developing countries. That is why recently in this budget, this decision was taken. Corporate income tax is reduced to 22%. The next important term is minimum support price. Minimum support price is the rate at which the government buys the grains from the farmers. What is the purpose of MSP? It is to counter the price volatility in the field of agriculture, and it is to maintain the buffer stock. This price is paid for the grain, and using that, government procures the food grain and maintains it as a buffer stock. So MSP is to support the income of the farmers. But instead of being minimum, now it has become the standard price for the food grain procurement. Now the government wants to de-link with MSP and the agricultural markets. That's why the recent agricultural marketing bills are in controversy. In many places, farmers are protesting against the bills. But in reality, the bills are not going to take away this minimum support price. Those acts were intended to increase the market access. Right, now let us understand what is how this minimum support price is calculated. This is calculated by this technical committee called Commission for Agricultural Costs and Prices, which is appointed by Ministry of Agriculture and Farmer Welfare. And the recommendations of this committee are just advisory in nature. And Cabinet Committee on Economic Affairs, this decides the final price of MSP, minimum support price. Now there is a controversy that MSP is less. Why? And some people criticized for the calculation of CACP over this MSP. So let us understand what is that. As of now, the CACP is considering A2, that is actual expenses, and then family labor, unpaid family labor, to calculate MSP. That is, MSP is equal to now A2 plus FL, and then 50% over it, and then 50% of this A2 plus FL. That's how CACP is calculating. But MS Swaminathan Committee in 2004, it has recommended, MS Swaminathan Committee is also called as National Commission for Agriculture. This commission has recommended for including the rentals or interest foregone for buying that particular land while calculating the MSP. So if this is also added, that becomes more remunerative. That's the suggestion of MS Swaminathan Committee, and after that, many of the farmers have demanded for this. But as of now, government is implementing this particular method. The next important term is priority sector lending. What is this? RBI designates certain areas as priority sectors. To these sectors, all the banks need to give certain percentage of their loans. So let's see. RBI mandates banks to lend certain portion of their funds, especially to agriculture, MSMEs, etc., which are part of priority sector list. What is the idea behind it? It is to reach the adequate institutional credit to these areas. Important. As of now, the scheduled commercial banks, foreign banks, they have to give 40% of their adjusted net banking credit to priority sector lending. We have the small finance banks. Do you know this? Small finance banks, payment banks, these are called differential banks. Small finance banks, they have to pay 75% of their total loans to priority sectors only. Important. Recently, startups is included in the priority sector list. That's why this is in news. Right? Priority sector lending, with regard to it, this one is in news. And the RBI said, yes, you are giving loans, but you are giving only in few districts and few areas. Now distribute them across various districts. Small and marginal farmers, weaker sections, they need to be given more loans. They are giving loans to farming sector, but to whom? To the large farmers. Now the RBI wants the banks to lend money to the small and marginal farmers also on a priority basis. The next important term is open market operations. Recently, RBI has gone for open market operations to gather the money or to increase the money supply in the economy. What are these? What is the meaning of open market operation? Open market operations are connected by RBI by way of selling and purchasing the government securities. Government securities. If government securities are sold in the market, people give the money and buy the government securities. What this leads to? This leads to a decrease in the supply of money. But if if RBI purchases the government securities from the public, they will get the money in their hands. So that way money supply increases. That means open market operation is a tool for managing the money supply. That's why it is considered as a quantitative tool of monetary policy. Right? Next. So if there is excess liquidity, government is going to sell the securities. If there is liquidity tightening, that is less liquidity, government buys the securities from the market so that money supply increases. So this is also used as a tool to control inflation. Inflation is less or more. So then it is based on money supply. In such context, RBI is going to use this instrument, open market operations. Next important term is foreign contribution. What is the meaning of this? Foreign contribution. See, foreign contributions are voluntary donations, monetary donations to an NGO or individuals, etc. for a charity purpose, for certain purposes. So there is this law called Foreign Contribution Regulation Act 2010, which was amended recently. So that's why this is a news. Government has used this particular law over the years to freeze the bank accounts of NGOs which are affecting the India's national interest. IB Intelligence Bureau has said that these NGOs are again acting against the interests of India. So many of the NGOs are getting the money from shell companies. Shell companies means the registration will be there on the node, on the legal documents, but the operations or the production by the company is zero. Such companies are called as shell companies. Their activities are zero, but there is a shell, just the legal entity exists, but the real operations are zero. So they are getting money from shell companies, etc. There are certain complaints. In such context, government has cancelled the licenses to certain NGOs and froze the bank accounts of these NGOs. And why this is in news recently? Recently, this FCRA has included a word called public authority. No public authority can receive the foreign donations. That's the clause added. Earlier we had government servants, but now public authority means any office that is substantially funded by the government cannot receive the foreign contributions from the foreign agents. Now, FCRA Act, under this particular act, registered NGOs, charitable institutions, they can receive the foreign contributions for 5 purposes: social, educational, religious, economic and cultural. And each NGO or each organization which wants to receive the foreign contributions, they need to get the license, and this license needs to be renewed once in 5 years. The license is given by Home Ministry. So it's not RBI which manages the foreign currency, but it's the Home Ministry because it deals with the security and sovereignty of the country. Right, here is the description on this particular act, FCRA. Please go through it once. Initially, it was enacted in 1976, and then there's a new act in 2010. After that, many amendments were made to this particular act. The next important word is seed funding. Seed funding is initial capital when starting the business. The seed funding is important for startups, which provides the monetary support. Those who are providing seed funding are also called as angel investors. Angel investors invest in initial stages. Venture funds. Venture funds invest in these startups and other companies in the later stage. Venture capital is invested at the later stage, but angel fund and angel capital is invested at the earlier stage only. So seed funding is very important. Government has started many initiatives to provide seed funding for the startups. Startup India initiative is there. Under that, many seed funding initiatives are there. Next important term is FRBM, Fiscal Responsibility and Budgetary Management Act. This FRBM Act establishes financial discipline and to reduce the fiscal deficit. fiscal deficit, revenue deficit. There are many deficits which we calculate. Out of them, FRBM Act wants to control few deficits called fiscal deficit and revenue deficit, effective revenue deficit. Why? Because these deficits will reduce the potential spending of the government, because government has to spend more money on interest payments and loan repayments. That's why FRBM Act wants to manage the limits of borrowing. But recently, due to COVID-19, fiscal stimulus needs to be given. Then many people have suggested to not to adhere to FRBM Act and borrow more money or print more money, spend more. That's the suggestion. In that context, FRBM Act is in news. See, it aims to make the central government responsible for ensuring the fiscal management. There is a term called fiscal prudence, maintaining fiscal prudence. For that purpose, this particular FRBM Act, this was enacted in the year 2003 many a times. The implementation of FRBM Act was postponed now also due to this calamity, this pandemic. We are using a clause called escape clause. Escape clause in the new FRBM rules. We are using it. Let us understand what is that escape clause. Now, these are the recommendations of N.K. Singh Committee. N.K. Singh Committee was appointed to review the FRBM framework in India, and this committee has recommended for these things: to reduce the fiscal deficit to 2.5%, to reduce the revenue deficit to 0.80% by 2023, and to have 60% general government debt. That means 40% for the center, 20% for the states, for the debt. And there is this council which is recommended by the N.K. Singh Committee, that's called Fiscal Council. This Fiscal Council's objective is to oversee the spending of the government. Now, what is this escape clause? Escape clause is to deviate from these targets under exceptional circumstances. What are these exceptional circumstances? National security, calamities of national proportions, severe collapse of agriculture, far-reaching structural reforms in the country, and fall in the real GDP output ratio of 300 basis points. So now, as we are in this COVID crisis, escape clause is used. For that matter, not just deviation of 0.5% as mentioned under this particular recommendations, but we are deviating on a large scale because we need to provide fiscal stimulus, otherwise economy can go into recession. The next important term is adjusted gross revenue. Recently, Supreme Court has given 10 years time for the telecom companies to pay the adjusted gross revenue. What is the meaning of this AGR? AGR is the fee sharing mechanism wherein in the revenue sharing model, telecom companies needs to pay the money to the Department of Telecom for sharing the spectrum. There are two types of activities, core activities and non-core activities. Already telecom companies have shared the revenue from their core activities, and there are certain non-core areas from which also the Department of Telecom wants money in the form of revenue sharing. So that case was in court for many years. Last year, Supreme Court has given the judgment and asked the telecom companies to pay the money immediately. But as they said, we are in loss. It has extended the time period with the consent of the central government to 10 years of time. The next important term is micro, small, medium enterprises. Recently, the classification of MSME was changed. That's why this is in news. And we are using composite criteria. Composite means one or more. So here we are using investment and annual turnover as a limit for understanding MSMEs. For micro units, investment limit is less than 1 crore and turnover is 1 crore. For small units, investment limit is 10 crores, turnover is 50 crores. For medium enterprises, the investment limit is 20 crores and turnover limit is 100 crores. Simply you can remember this way, into 10, into 10. So into 2, into 2, right? So this way you can remember. So while calculating this, they have used this particular criteria. And why MSMEs are important? MSMEs contribute about 45% of India's manufacturing output, 40% of India's exports, 30% to the national GDP, and large numbers to the employment. That's why MSMEs are very important to India. The next important term is essential commodity. Recently, Essential Commodities Act was amended, that's why this is news. But remember, under this particular act, there is no specific definition of what constitutes essential commodity. Whatever is listed under schedule under this particular act are considered essential commodities. What is the purpose of this act? Essential Commodities Act, it is to bring in the price stability and to reduce the hoarding in the country. Now, what is the interrelation? See, Ministry of Consumer Affairs, Food and Public Distribution, this is the nodal agency which implements this particular act. So there are in the schedule of this particular act, there are 7 commodities as of now: drugs, fertilizers, organic or inorganic. Third one, foodstuffs. Fourth one, yarn made of cotton. Fifth one, petroleum and petroleum products, jute and jute textiles, seeds of food crops, fruits, etc. So these are the 7 items that are placed under this essential commodities. In the Amendment Act, Essential Commodities Amendment Act, government has removed cereals, pulses, etc. from this list. That means only under exceptional circumstances that will be placed under essential commodities. Otherwise, what is happening? There are stock limits under essential commodities. When there are stock limits, the private investment in warehouses and storage won't be there. That is the purpose with which the government has amended this particular Essential Commodities Act. These are the provisions of this act. Earlier, the government has passed an ordinance. After that, Parliament has passed the act. So please go through this carefully. The next important term is shadow banking. Shadow banking is a term which describes bank-like activities but which are not placed in the traditional banking sector. We have Banking Regulation Act. Banking Regulation Act 1949, this regulates all banking activities in India. All banks and banking activities in India. So there are certain agencies which are generally called as in India NBFCs, non-banking financial companies, which perform similar activities like banks. They lend the money, they take the deposits, only few NBFCs take the deposits, but they lend, most of them lend the money. So in that circumstances, there are certain banks which acts as financial intermediaries similar to banks, which are called as shadow banks, and this type of banking is called as shadow banking. And these are important to reach the last person, and that's why it is important for financial inclusion to maintain liquidity in the system. So NBFCs are in crisis, that's why shadow banking issue is in news. There are many NBFCs which are in losses, liquidity problems. This year's economic survey has mentioned that they are taking short-term loans. That means they are going to pay the loans within short period of time, loans of short-term, but they are lending activities, they are lending for long-term. That means there is a mismatch between lending and borrowing. Sarna, long-term lending and short-term loans. This mismatch is leading to crisis in NBFCs along with other reasons. That's why this is in news. The next important scheme is Ponzi Scheme. Ponzi Scheme is an investment fraud. Now this is banned in India. Ponzi Scheme organizers, they promise high returns with less or no risk. Such schemes are called Ponzi schemes. There are other schemes like pyramid schemes or network schemes. Pyramid schemes means a person is asked to join other members so as to get the money. So such kind of network schemes, now these are under RBI scanner, Ponzi schemes, etc. are banned now in India. The next important term is strategic disinvestment. Already few years back, Niti Aayog has suggested to go for strategic disinvestment of all non-important PSUs. Now let us understand what is the strategic disinvestment. In economic survey, this concept was discussed elaboratively. That's why this can be a potential question for this year. Strategic disinvestment means selling the substantial portion of the government share from a central public sector enterprise. In general, central government holds less than 50% share and sells the share to others, private companies. Right? They transfer the management control also to the private sector. So what is the importance of this? There is this basic economic principle that where economic potential is good for the private sector and where they can handle, government doesn't have any business. So for that purpose, government is disinvesting. It leads to capital infusion, it leads to technology upgradation, it leads to efficient management practices. That's why disinvestment as a path is chosen by the government. Unlike the simple disinvestment, this one finally leads to privatization, means slowly government is selling its share to private companies. As the share is already less than 50%, slowly it can lead to privatization. That's an important aspect. The next important term is insider trading. Insider trading means someone who has the information, confidential information, uses it for his or own personal advantage instead of the organizational advantage. That's called insider trading. It's an act of trading directly or indirectly, especially in the securities market, a public listed company by any person. By having that information, they sell or purchase the shares based on the internal information. Such thing is called insider trading. This leads to market manipulation. Free and fair market won't be there. So this leads to market manipulation. SEBI, that is Securities Exchange Board of India, has regulations to prohibit insider trading. Important. Insider trading is prohibited by SEBI. The next term is whistleblowing. Whistleblowing. What is the meaning? Within an organization, let's say there's some unethical practices or unethical happenings going on, such things can be made public by the person working within that particular company or who is a stakeholder in that company. Such thing is called whistleblowing. In general, it might be disadvantage to the organizational interest. But if it is in the public interest, disclosing such information is not punishable. Whistleblowers are in fact protected by the separate act called Whistleblowers Protection Act 2014. Companies Act 2013 defines this way. And there's one more act called Official Secrets Act. This Official Secrets Act is overridden by this Whistleblowers Act. That means whistleblowers, if they disclose certain information, he or she cannot be punished saying that these are official secrets, the person has disclosed it. Such things cannot happen. Whistleblowers can even leak the information which is under Official Secrets Act. But it's not making the information public in the media, etc. It's before the competent authority. The next important term is Public Credit Registry. Public Credit Registry is in use since last few years. There is this committee called Y.M. Diosthali Committee. This committee has recommended for going for Public Credit Registry. Already credit registries are there in India. But all these are private credit registries. For example, CIBIL scores. In general, we check the CIBIL scores while taking loan or something else. So such things are there. Such credit registries are there. But now there is a need for public credit registry which has trust from the banks, which is used as a database, central database, which can be accessed by all the banks. For that purpose, this has been recommended, as of now not appointed. This is simply a database of credit information of all the borrowers, which will be accessible to all lending agencies to take the decision making. For example, one collateral is placed with multiple banks. Such frauds can be avoided if they have the common database. So PCR, Public Credit Registry, will capture the information from the borrower and helps in streamlining the credit system in India, especially to reduce the NPAs, etc. It will be useful. The next important term is Exchange Traded Fund, ETF. What is this? This is similar to mutual fund, but here there are certain group of companies which come together and they place their shares as a group or as a stack, and this as a group will be sold in the market. Such funds are called ETF. ETF is a fund that comprises a group of stocks that can be freely exchanged in the stock market. ETF reflects the composition of an index like BSE Sensex or NSE's Nifty. So its trading value is based on the net asset value of the underlying stocks. Well, how is it different from mutual funds? Because ETF prices can be varied within few seconds, within minutes. But in the mutual funds, Their prices vary only once in a day. In a trading day, only once it varies. But in this ETF prices can vary on a real time basis. That means these are more flexible. That is the main advantage. The next important term is Open Acreage Licensing Policy. What is this Open Acreage Licensing Policy? We have Hydrocarbon Exploration Policy, HELP. This Hydrocarbon Exploration Policy, this was launched by the government to provide the licensing to the explorers. Now, under this, there is this term called Open Acreage Licensing Policy. Under that, so let's say if this land is given for lease to a company for exploring oil. If there is shale gas in this same area, the same company will be given the license to explore the shale gas also. Such common licensing is there, that is called Open Acreage Licensing Policy. So this will simplify the licensing process in the hydrocarbon sector. That increases the ease of doing business. HELP, Open Acreage Licensing Policy, very important. The next important term is elephant bonds. What is this? Elephant bond is a long-term sovereign bond, 25-year sovereign bond. It is used to declare the undisclosed income of the people. So government asked, go and invest in these bonds. And this is the recommendation of this high-level advisory group on trade policy. And this fund that is gathered through this particular way will be used for infrastructure projects. But this is a suggestion. Government has not yet implemented this. Elephant bonds, large, huge. As this is a 25-year maturity bond, that's why the name is elephant bonds. The next term is fiscal stimulus. Fiscal stimulus refers to increase in the public spending. When there is less demand in the market, spending should be increased. That way, it leads to revival of the economic growth rate in the country. How? More demand, more production, more employment, more wages, again more demand. That way, entire economy gets revived. For that purpose, fiscal stimulus can be provided in two ways. One, by increasing the public spending. Two, by reducing the taxation. See, if we need to increase the money with the people, that's it. Either we can spend or we can reduce the taxes imposed on them so that there will be money. So this can encourage the economic growth rate. That's why the Atma Nirbhar package is called as fiscal stimulus packages, or no? So there are many measures in that which saves the money with the people or which provides money to the people. So that's called economic stimulus. Economic stimulus is an approach, conservative approach of expansionary fiscal policy or expansionary monetary policy where money supply will be more. The next important term is APMC, Agricultural Produce Market Committee, APMCs. These are regulated markets managed by the market committee. These are for the purpose of regulating the notified agricultural produce and livestock, important. Not just the agriculture, but also the livestock in physical, electronic or in any other such mode declared by the government. They promote the agricultural marketing. As agriculture comes under state list, central government can only provide for model laws. So in 2003, Model APMC Act was enacted and central government has asked the states to open the agricultural markets. Many states have implemented the agri-market reforms, but few states have not yet deregulated their agricultural markets. So APMC are the primary agricultural markets that they have. So in such circumstances, recently the government has introduced the marketing reforms, agri-marketing reforms, and there is this act that was passed recently and there were protests against that. Because especially in states like Punjab and Haryana where APMCs are strong, they are protesting. In other areas already agri-produce reforms are there. That's why they are not protesting. So these are the important points from that. Please go through it once. The next important term is Atma-Nirbhar. Atma-Nirbhar is self-reliance. There is a difference between import to substitution to self-reliance. What is the difference? Import to substitution means it is a deliberative policy wherein we are going to use the substitutes for importing. Instead of importing, we are going to use the substitutes. That is to reduce the dependence on other countries. But self-reliance is increase the dependence on our own country and to increase the domestic manufacturing and domestic industries. Self-reliance is India-centric. Import institution is to reduce the dependence on others. This, yes, reducing dependence is an aspect to self-reliance. But that's not the main motto. Self-reliance is to increase the indigenous technologies, indigenization, etc. Right? Both are similar but indifferent. So now, under Atma Nirbhar Abhiyan, our government has proposed for 5 pillars of self-reliant India. 1. Economy. 2. Infrastructure. 3. Technology. 4. Demography. 5. Demand. But in most of these areas, after announcing this, we are doing badly. Yes or no? But there are many reforms that are introduced. Agri reforms, taxation system reforms, labor reforms, all these reforms that are introduced recently. But there's a lot more that needs to be done to revive the economy. The next term is working poverty. What is this? Working poverty is earning less than $3.2 per day in purchasing power parity terms. That is considered as working poverty. World Bank defined it this way. ILO, International Labour Organization, also considers working poverty is one of the serious issues in the world. Because, for example, if you observe around us, there are people who are working for 6,000 rupees, 7,000 rupees, 9,000 rupees, even the graduates working at these wages or salaries. Yes or no? So in such circumstances, that is called as working poverty. ILO defined it as 630 million workers in the world are experiencing working poverty. That means 1 in 5 persons, working people, are experiencing working poverty. So this is an underpaid work, not unpaid work. This is underpaid work. The next important term is helicopter money. What is this? This is unconventional monetary policy tool, not a conventional one. Unconventional monetary tool. This involves printing large sums of money and distributing it to the public. Why? To stimulate the economy during the recession, or when the interest rate falls to zero, then government does this. Interest rate falling to zero means demand is less. And to stimulate the economy, governments try to go for helicopter money. In this particular policy, central government directly increases the money supply via the government and distributes the new cash to the population. Via government, it distributes the cash to the population, but there is no repayment liability, and it increases the inflation. That's why helicopter money in the form of printing money and distributing it is not a favorite option, because it increases the inflation. It will not increase any production over a period of time, but only economy develops gradually. So that's why helicopter money theoretically is good, but practically implementing it on that scale is difficult. The next important term is universal basic income. Just now we said UBI. Universal basic income is every person should have a basic income which enables the person to lead a minimum quality life. So universal basic income, it prevents poverty. It increases equality among the citizens. Yes or no? That's why Economic Survey 2016 and 17 have advocated for this concept. Government is implementing PM Kisan. What is this, by the way? PM Kisan is a income support scheme. This is a kind of universal basic income, but targeted basic income. We cannot call it universal because everyone should be given money, but targeted because it is targeted only towards the farmers. Universal means every citizen in the country gets some money. So as of now, targeted benefit transfers are used in India to reduce poverty and to support the income. The next important concept is force majeure or situation of act of God. What is this? So during any contract, obligations are there. So by this time you are going to pay me this much and I will provide you these services or these goods. So in case of any breach of this contract, these are the punishments. Like that, in general, a contract has certain terms. But there are certain exceptional circumstances where a particular person or a particular company cannot provide the required services or goods, or that means the contract obligations will be breached. Exceptional circumstances. Such exceptional circumstances leads to force majeure wherein the contract provisions are not effective. That means if force majeure clause is invoked, companies cannot ask for the commitments. For example, this COVID-19 is one such situation, force majeure situation. The next important term is long-term repo operations, not reverse. Long-term repo operations, what is this? LTRO is a mechanism. It is a monetary policy tool. Generally, repo rate is a monetary policy tool. It is used as a short-term money tool. That means when banks experience money shortage or money shortfall over the short period of time, they go to RBI, they take the money and they pay interest rate worth repo rate. But now in this long-term repo rate operations, what the RBI is doing is, RBI is asking banks to take the loans over a long period of 1 to 3 years, and they have to pay repo rate only. In general, as repo rate is for short period, repo rate is less. The interest rate is less. But if the banks wants to take the loans on a long-term basis, they need to pay bank rate which is higher than the repo rate. But now, because of the liquidity situation, RBI said, banks, you take the loan and long-term loan, but you need to pay only this interest rate, that is the repo interest rate. That is called as long-term repo rates. So 1 year and 3 year loans at the repo rate only. LTRO will be in addition to the existing liquidity adjustment facility, marginal standing facility. These two also bridges the gap or shortfall in the revenues. So LTRO also helps in bringing more liquidity into the economy. Very important. These are the first 30 terms. So we still have 25 more terms. We will discuss them in part 2. All the very best. Thank you very much.